From the Center for Agricultural Profitability at the University of Nebraska-Lincoln, this is Nebraska Farmcast. I'm Ryan Evans. Cattle prices are up this year, but rising interest rates and challenges in the labor market present important decisions ahead for livestock producers. We'll explore how cattle producers can adapt their strategies to mitigate the negative effects of the current economic environment while maintaining wide profit margins. University of Nebraska-Lincoln livestock economist Elliott Dennis is an assistant professor in the Department of Agricultural Economics, and he has a new article up on our website at cap.unl.edu discussing current price trends and the importance of adopting strategies to be more profitable this year. Hey, Elliott, thanks for joining me again.
Yep, thanks for having me.
So first, what has the price situation looked like here in the first part of the year for feeder and fed cattle?
Yeah, really record prices, at least nominally. And I think that's been a lot of the chatter that's been out there. Fed cattle prices above 170, feeder cattle prices well above the 220, depending upon the weight range. But a lot of conversation has been happening about how these prices really compare with what we experienced last time in the highs of 2014, 2015. And the real point was that in an environment where inflation is steady, or has low variability, then comparing across years is really not that problematic. However, if we've noticed over the last couple of years, inflation has been a huge problem. And so what we really need to do is adjust for inflation. And the way that we do that is we take that nominal price and we divide it by some sort of index. In this case, we use the personal chain index, which is used by the St. Louis Fed. And what really we find, once we do that, we get what we call real prices. And when we compare real prices, what we find is that the prices that we're experiencing today are actually still lower than the highs that we experienced in 2014, 2015. So what does it ultimately mean? That there's potential to continue to have growth in the market, given certain assumptions about demand. And then we talk a little bit about the impacts of that inflation and what the national economy is doing, and how those effects trickle down into the livestock industry.
And of course, interest rates have been on the rise to try to combat inflation. The Federal Reserve raising those a few times this year already. How has that impacted livestock producers?
Yeah, so about a couple weeks ago, the Federal Reserve once again raised it by about a quarter point. There was some optimism that potentially they could be slowing this down. However, last week, the inflation came out again. It remains persistently high. So whether we're going to see a decrease in the federal funds being raised again, I think we just have to wait and see. However, there is kind of pessimism out there that the Fed hasn't done enough to raise and combat inflation. And this really kind of sets up the situation of where the Federal Reserve was prior to COVID. We had a federal funds rate that was pretty much at 0%, which means it was very inexpensive to borrow money, both on the banking and the personal side and also on the commercial side. They were also buying lots of bonds out there, and so they had a large balance sheet. And then as things have started to take off with inflation, they've had to make certain changes. And essentially what they do is, as prices start to take off, we say that the economy is overheating. We kind of have this target. They say 2%. It could be any target, but the Fed has adopted really a 2% policy. And so one way to combat that is to raise interest rates. Those prices and the impacts of raising those rates really trickles down to the livestock industry. And what we see is that the Federal Reserve will systematically raise those interest rates. The Dallas Federal Reserve tracks the feeder cattle interest rates, and really over the last 20 years, those have been on a steady decline, in line with the federal funds rate. And really beginning in the second half of 2022, we started to see those prices really jump up. The loan renewal cycle, people have gone through that already, but have noticed that their rates have jumped up dramatically. And we're at a situation where about feeder cattle interest rates jumped from about a little over 5% to now well over 8% on the feeder cattle interest rates. And ultimately, what that means is it makes it more expensive to raise cattle, especially when we talk about the short-term interest rates on, let's say, feeding feeder cattle to produce fed cattle. really these are rates that we haven't seen since 2007, 2008. And if there is an expectation that the federal funds is going to continue to rise, we could well surpass those higher interest rates than we had in 2007, 2008. Ultimately, what does this mean? This means that we're in a situation that many producers, especially if they're younger, have not yet experienced. And so just managing for the market that we're currently in and not what we've just historically done.
Yeah, and then to that point, I love the headline that you provided for your new article. Higher prices are good, but wide profit margins are better. So to that end, how can livestock producers adjust their strategies to reduce the impact of these rising interest rates on their profit margin?
Yeah, so what we know is that as interest rates tend to rise, it tends to be kind of dampening effect on prices. Prices will rise, but not by that much. And at the same time, last year we were dealing with high input prices on the variable cost side, higher corn prices, higher feed prices. This year, what I was trying to highlight was that we have these systematic effects that are squeezing profit margin. One of those is the wage rate. And just like we're seeing a lot of pressure to keep up with wages on the commercial side, we see a lot of pressure to keep up with that on the ag side as well. And USDA, National Agricultural Statistics Service, does a quarterly wage report for animal workers. And what they see is that wage rate has risen sharply over the last 2 years as well above trend, and the largest above trend that we've ever experienced. And those wage rates are somewhere in the $16 to $17 an hour. And what we see is that if we compare our wages to those experiencing the Southern Plains, our wages are even more expensive than them. And so really what we're still dealing with is a fixed labor supply and even a potentially reduced labor supply in rural communities. And now we're competing for a smaller workforce, and workers have to decide, are we going to go to work for a crop operation or are we going to go work for a livestock operation?
So what are some ways to maybe help mitigate those challenges?
Yeah, so a lot of things that are being talked about right now is about technology. How do we eliminate or better use our employees? So there's a lot of technologies that are out there. For instance, in the feedlot side, we're talking about animal health or detection of animal health outbreaks. There's lots of technologies out there that are really trying to manage on the individual animal level rather than on the pen level. On the cow-calf side, there's things like virtual fencing that are starting to be proposed. How do we potentially do intensive grazing without having the burden of putting up a whole bunch of cross-fencing, and also having the flexibility of, hey, if a pasture doesn't look great this year, how do we adjust this virtual fence so that we can graze the operations or the parts of our operation that really need the grazing? So those are types of things that we have less labor to put up the fence, to maintain the fence, and using kind of those aspects of technology. The University of Nebraska is trying to figure out which of these technologies work. In turn, they try to work with the Department of Agricultural Economics to say, hey, what is the trade-offs? How does this improve production? And ultimately, what are the economic trade-offs between these technologies, and which ones actually have a positive net return back to producers?
Great. And until those are maybe more widely available and ready to be implemented, or if somebody's not in that position right now to implement those, what about in terms of just simply recruiting and retaining people as employees? Yeah.
This is actually an ongoing issue that we talk about. The University of Nebraska Department of Ag Econ, we do a feedlot labor survey where we actually track, what are wages. And in this past year, we talked about, when do you talk about wage increases? What non-monetary compensation do you give? Do you have a house? Do you have a truck? And so when we talk about it's not just wage, it's potentially non-wage benefits as well. That can be really substantial when we calculate their monetary value. And then the last is people, especially younger generation, I want to see value. I want to see purpose in what I do. And so providing the training and the vision for them to kind of see where we're working towards is really important. And this is some of the ongoing work that I have with the Department of Animal Science of looking at animal health, disease, animal health, and even worker injuries, and how do we provide training to livestock workers to kind of limit that. And that all comes back to training and understanding. But first we have to quantify that, which is what we're doing.
Great. Well, that's Dr. Elliott Dennis with the Department of Agricultural Economics and the Center for Agricultural Profitability here at UNL. Again, check out his new article covering what we've been talking about here in this episode on higher prices. They're good, but what about wide profit margins? They're better. So thank you so much, Elliott, for the great information, and we'll look forward to hearing from you again very soon.
Yep. Thanks for having me, Ryan.
Nebraska Farmcast is a production of the Center for Agricultural Profitability at the University of Nebraska-Lincoln. For the latest research-based information and education resources to manage your farm or ranch operation, visit our website at cap.unl.edu. That's cap.unl.edu.